Hi guys. This video is the overview of chapter 15, and I'm going to use problem 15-3b to illustrate the concepts of chapter 15. So chapter 15 is all about job costing, and job costing is where we have individual jobs for customers. It might be an auto repair facility or a custom home or something where the customer has a different need than every other customer. And so we're tracking our three product costs: direct materials, direct labor, and factory overhead through this production process. And we're going to focus on one account. That's the work in process account. The work in process account is the place where we accumulate our three product costs: direct materials, direct labor, and factory overhead, as we produce the product. And then when we're done, we transfer it from work in process into finished goods. So we have now three different inventory accounts: raw materials, where we keep all of the stuff that we're going to use; work in process, where we're going to track the production of our three product costs; and then finished goods, with making whatever it is we're making. We transfer those costs into finished goods, and then when we sell them, of course, that gets moved into cost of goods sold. So this problem is on page 604 and 605, and it's the Star Manufacturing Company. And I'm going to just make one journal entry, just so you know that these have to be recorded in the journal. But for most of the transactions, I'm going to just put them into T accounts and assume that you'll know how to make journal entries from the transaction. So let's get started. This company has no beginning balances, so that you could say this is the only, this is the first month of operations. They don't have any beginning balances. And by the way, let's take a look at this. Because we're talking about multiple jobs, we're going to have a work in process subsidiary ledger. And a subsidiary ledger we've had before with customers, when we're tracking accounts receivable, with vendors, where we're tracking accounts payable, and merchandise inventory, where we're keeping track of different types of inventory. So in this case, we have a subsidiary ledger for our work in process account. So we're going to keep track of each one of the individual jobs in the work in process subsidiary ledger as we post transactions into the work in process account. So anytime we put something in the work in process account, we have to also post it to the work in process subsidiary ledger. So the very first transaction says purchased raw materials on credit, $125,000. So I'll go to my journal. This is the Star Manufacturing Company. And I'm going to go ahead and stop the video and put this information in, and I'll be right back. Okay, so here is the journal entry. Debit raw materials going up, credit accounts payable. So now we'll go over to the general ledger and we will post this. I always like to use references, and so we debit raw materials, $125,000, and credit accounts payable. Transaction 2 says that the materials that were requisitioned, requisition means that they were moved from raw materials into work in process, $92,000 is a credit for raw materials. It's coming out of raw materials. And we have to break up the materials that went directly into jobs and the materials that are going to be just used in the factory, supplies or indirect materials. A lot of times solder or paint or stain or things that are hard to track to individual production items, we put into factory overhead as an indirect material. In this case, we've got 12,000 that's going into factory overhead and 80,000 directly into the jobs, and we have to post the amount to each individual job, and we'll label it the same letter. Anytime we put something in a work in process, we have to put it into the work in process subsidiary ledger. So 487 is 30,000, 48 is 20,000, 489 is 12,000, job 490 is 14,000, and job 491 probably started towards the end of the month, was 4,000. So this 80,000 is spread to each one of these jobs. Let's get the right amount in there, and it has to match. So a debit in work in process is going to be a debit to each one of the jobs in the work in process subsidiary ledger. Item C, paid $11,000 cash for miscellaneous factory overhead costs. So cash is going to go down. That's 11,000. This is C. And factory overhead is going to go up. That's a debit. Factory overhead we'll talk about more in a minute, but it's where we keep track of all of the costs that are to run the factory. The rent, the utilities, the electricity, anything that has to do with the cost of running the factory, including supervision or other indirect labor. And now is the time to record that. So item D says time tickets record the use of following labor for the month. The wages were paid in cash. So what's happening here is we spent $84,000. So we're going to have a credit to cash for $84,000. This is item D. And part of it is indirect labor, $16,000. So we're going to put that into factory overhead. Indirect materials, indirect labor go into factory overhead. That's for the supervisor, inspectors, and those kinds of people. And $68,000 is going into work in process. So we also have to post that into the individual jobs. I'll do that and stop the video. I'll be right back. Okay, so now posted that direct labor into each one of the jobs. And now item E, they've asked us to apply overhead to jobs 487, 489, and 490, 487, 489, and 490. Those are the jobs that got finished during the month. They told us at the beginning that their overhead application rate is 200% of direct labor. So I'm going to post just the direct labor times 2 or 200% for 487, 489, and 490. I'm just taking the direct labor, which is D, multiplying it times 2 or 200%, and that amount is going into the work in process account. So if I total up those three amounts, get $118,000, and I'm going to debit work in process and credit factory overhead. In effect, what we're doing here is we're transferring the cost out of factory overhead and into work in process. So now we have our three product costs: direct materials, direct labor, and factory overhead in the work in process account, so that we can now transfer the total cost of each one of these jobs, 487, 489, and 490, they're finished. And we're taking these out of work in process and into finished goods. We're going to label this F, because that's what it is in the book. And so when I total these up, it's coming out of work in process, which is why it's a credit. It's a credit in the subsidiary. It has to be exactly the same. It's $233,000, and it's coming out of work in process and going into finished goods. It's finished. These are jobs that are ready to be sold. Transaction G is where we sold them. So we sold these on credit for a total price of $340,000. So we're going to have to credit sales for $340,000. This is transaction G. And we're going to debit accounts receivable because they were on credit. Our customer hasn't paid us. They're going to pay us later. But we also need to transfer out of finished goods the cost of those two jobs, the two jobs that were sold, 487 and 489. So I'm going to total 487 plus 489. 487 was 54,000, 489 was 87,000. Those are the jobs that got sold. This is our cost. This is transaction G also, because we know that we have to record the sale price and we have to record the cost so that we can get our gross profit. I'm going to stop the video and I'm going to prepare the schedule of sales and gross profit for the month down here. I'll be right back. Okay, I've prepared the schedule of sales and gross profit. Just so you know, the book didn't tell us what the jobs were sold individually for. They just told us that they were sold for a total of $340,000. I just arbitrarily picked $140,000 for 487 and $200,000 for 489. Just so you know, just so I can illustrate it. But normally they would tell you that, or we would know because we could look at the invoice. They weren't sold. Even if they were sold to the same customer, we'd know what the selling price is. So the gross profit is a total of $199. I pulled the cost of 487 from here. I pulled the cost of 489 from the 489 subsidiary ledger account. And then we had gross profit of $86,113,000. So our next transaction says the company incurred the following overhead costs during the month. And so I will record these things and I'll be right back. So transaction H was $96,000. That's a debit to factory overhead. We had a credit to prepaid insurance for $7,000, credit to property taxes payable of $31,000, and accumulated depreciation was $58,000 for both the factory building and the factory equipment. Just have one account for that. Total $96,000. And so now we can apply overhead to our two jobs that are still remaining. Two jobs still remaining in process are 488 and 491. We'll do our 200% for job 488. This is transaction I. And post that as a credit to factory overhead and a debit to work in process. So we transferred the cost of the jobs that we completed in transaction E, and now we're transferring the overhead cost of the two jobs that we did not finish, 488 and 491 now. So we can total up both of our unfinished jobs, 41,000 for job 488 and 10,000 for 491. We'll label those ending balance. I'm going to stop the video and I will total these up and balance out the work in process T account. I'll be right back. So the ending balance in work in process of 51,000, which is represented by these two jobs, 488 and 491. That total is 51,000. Is it a coincidence that that total balances to work in process? Absolutely not. It has to work that way. Anytime we put something in work in process, we have to keep it in work in process subsidiary ledger. And so at the end, it has to balance out. So our ending balance in work in process, 51 grand, represented by these two jobs. And the last thing is our one job that did not get sold, which is job 490. I'm going to prepare a schedule over here that has the direct materials, which is 14,000, 26,000 in direct labor, and 52,000 in factory overhead for a total cost of the 92,000. And that is the balance in our finished goods account. Again, coincidence? No. 92,000 is the job that did not get sold. It got finished, it did not get sold. And the last thing we need to do is balance out the factory overhead account. And what happened here is we applied a little bit more than what we actually incurred. So the left side or debit side of factory overhead is the cost that we incurred for the month. Again, utilities, indirect materials, the insurance expired, depreciation on the equipment, all of these things went in on the debit side. We applied them on the credit side. And we applied a little bit too much. That's based on that 200% application rate that was calculated at the beginning of the year. Do we do anything with that? The book tells you to move it into cost of goods sold. For $1,000, I probably wouldn't do that in the real world, but this is just an example where our 200% was maybe a tiny bit too high. It's no big deal. We can adjust it maybe in the future, but I would just leave it alone and not worry about it. So the last thing I wanted to do is prepare a manufacturing statement using this information. This information is all right there for us to be able to prepare this manufacturing statement that we looked at in chapter 14. So I've got a separate tab with the manufacturing statement. I will go ahead and prepare this and be right back. So I got started here. Our three product costs: direct materials, direct labor, and factory overhead. So my total manufacturing costs are going to be the 80 plus the 68 plus the 135, which is 283,000. We didn't have anything in process at the beginning of the year or the beginning of the month, so we don't have to worry about that. But we do have goods in process at the end, which is 51,000. We also had the $1,000 of over-applied overhead. We'll put that in here, and our total cost of goods manufactured is 233,000. That should agree to our general ledger account for what was transferred from work in process to finished goods. In effect, this manufacturing statement puts a detail on the transfer here from process to finished goods. So that's it for this video. Practice this using the sheets that I provided, and I'll see you again soon. Bye-bye.